Good morning, traders. Hello, everyone, and welcome to another live webinar. How is everybody doing today? Are you guys okay? I hope so. So, wherever you are from, wherever you are watching us, would like to say a very, very big welcome. So, let's get started. First on the list, the dollar index yesterday. The CPI announcement was actually reported um, with higher number than expected. So the actual number was greater than the forecast, but the market really didn't maintain any bullish bias. And we saw that not only on the dollar index, but also in all the majors. We've seen that at the beginning, the dollar index the dollar gained some strength. By the end of the day, it retraced almost 90% of the move. So this is a sign of weakness rather than a sign of strength. But at this point here, if we observe what's going on this dollar index, so we can focus on the euro, pound, and the rest, the market is still trading below the downward trend line, still trading below the 20-period moving average. Here it's an outside candle or long leg doji, rejecting the upper part or the higher prices. So the expectations really after this occurred is to see the price move away from this range. So if the price breaks below this area, let's call it S1, we expect it to see continuation until it will at least reaches the monthly support. We took that from the last month's move. On the other hand, if the price moves upward and penetrate the resistance at R1, that's the high of the last Friday's non-farm payroll. Actually, we do expect it to see a move to the upside. So at this point, the market is really moving nowhere. There is no any sequence of lower highs and lower lows to define a downtrend. There is no sequence of higher highs like this one, point on the chart, and higher lows to define an uptrend. Let's check the euro and the US dollar. Euro US dollar pretty much on the same. The price is still trading between this high and this low. There are multiple supports on the intraday level and resistance only two. So we might gonna see some directional move today. Who knows? Based on this chart pattern, ideally the breakout to occur to the upside will be beneficial to focus on the next moves. We can start looking for long positions, but this will only happen after the after a move occurs. So we need to wait to see what the market will do at this point. Next one, Great British Pound and the US dollar. So this one, it's a little bit better in my opinion, because a bullish engulfing occurred along with a nice long leg rejection at the 20 period moving average. So we can technically see an ascending triangle on the hourly chart, or if you go even lower, and a break above can lead the price all the way to this monthly resistance. So keep an eye on that, guys. That looks a good one maybe for today. Let's check the hourly time frame or even the 15-minute chart. Do you guys trade on the 15-minute chart, hourly chart? Which time frame are you trading on the intraday basis? Let me know on the comments, please. So if you're trading on the hourly, on the 15-minute chart, for example, and you are looking, you always need to look the higher time frame for direction, and then you refer to the lower time frame for execution. And if the price, for example, now it makes lower highs and lower lows on the 15-minute chart, if I'm interested to trade long based on the higher time frame direction, and I look that this is in an uptrend, maybe a consolidation here can be defined by some parallel trend lines. So if price moves somehow like this, a breakout above here can signify the first bullish position, or if you want to wait for a break and a correction, again, that's something you can do. So keep the USD, keep the pound USD on your watch list. USD Canadian dollar. This one, although I was looking for these areas to initiate some more short positions after I got a losing trade on the false break at this candle here, I tried to re-enter the market at the break of this low, but the market never took the trade, not even though yesterday. So maybe the market wants to come and retest this inside resistance, a very, very strong resistance. So you can look for the price. If it's going to reach this area here, it might going to activate some sell orders. But again, guys, the CPI yesterday should have given us some direction. That was the non-farm payroll high and the non-farm payroll low. That's the high and that's the low of the NFP. And then that's the low and that's the high of the CPI. The market really didn't move, didn't close higher, didn't close lower. Now sellers are trying to push the price lower. It's very indecisive, and we have to wait and see some direction, to be honest. At this, under different market conditions, this kind of pullback or correction or retracement could have happened with solid candles with a defined bodies, and as you see on this example here, price move downwards and then start moving upwards, but in a way that retail traders like us could get some benefits, or like this move to the upside. price move upwards with a solid candles, not much of wicks and crazy stuff, and then it moves downwards with again solid candles. So we could take trades. Actually, we could take in some trades here. All right. So from this point, if the price breaks below this low here, or if the price breaks above, there are certain levels to keep an eye on that and watch for the price. Maybe we'll find some support or we'll find some resistance. And that's pretty much trade. This kind of trades can be taken on the lower time frames. Good morning, guys. EAY coming on clouds. Hello from Algeria, someone said. Welcome. Somebody says, nice to meet you guys here. It's our pleasure to have you. Blaine said, good morning, bro. Good morning. BB said, the new here. What's the topic? Market analysis, of course. And let's keep moving. USD JPY, daily chart, price broke outside the downward trend line. That was one good trade. I've sent it some on the live we did 2 days ago, and I posted as well on the YouTube channel and on the other channels you guys watch the two trade setups. The one was USD JPY and the other was Euro JPY. We took on the intraday time frame on the 15-minute chart after we spotted that the market created this push to the upside and it made a higher high either on the high points or on the closing points. And then the sellers, they weren't able to push the market lower, and then this pin bar here appears. It was a good signal to start looking for longs, at least until the price reached this R1 resistance, as I marked it before it was already on the chart. So what did we achieve there? It was, we were somewhere, it was, no, sorry, it was somewhere here. I'm not sure. You can watch the video exactly where was the entry. Stop loss was below these lows, I think below this one, entry there. We went for 221, and the same with the euro. So that was the good trades of the week. After that, the market rejected at this previous resistance. Now, if today, here is, guys, this is how you will read the trends to understand the market sides, buyers and sellers. In a trend, while the market is in a trend, we can read the market. When the market is sideways, we cannot read the market. We can't. But we read the market only when it's in a trend, when we identify that a trend it started. And at this point here, if you would have taken some trades short, let's zoom in a little bit. Based on what we explained, we understand that the market created a new structure, so it moves upwards. Therefore, at this area here, if you were convinced that you were going short, you will have watched the price action. The following price action had a very small range, which is good, but also a very small body. On the other hand, when the market hits resistance, the price really melts. Like here, the market hit resistance and the second candle, it was a very well-defined bearish candle. Here, the price was not that strong to favor the sellers. So let's say you entered there, you had a stop loss above here, and you were in the trade. Now what? You saw that the market didn't move really well, and the candle after that, it was a bullish candle. A bullish candle rejecting the 20-period moving average. So a bullish candle rejecting the moving average where the sellers are in control, it's not a signal to, it's not something you use to stay in the trade. Conversely, you should have been out of the trade when you, after you saw this candle here. But for me, reading the trend and explain it during the live, we identify that here it's the beginning of an uptrend, a possible uptrend. So we were waiting for a kind of retracement to go long. And after this candle here, we found an opportunity on the 15-minute chart. We went for 2 to 1. Now, price hit resistance, but the market, it's already in this higher high and higher low. So am I looking to sell? No, I'm not looking to sell. Am I looking to buy? On this time frame, if the price breaks above this high here, yes, I'm looking to buy. But on the 15-minute chart, really, and let me tell you a secret on how to trade the lower time frames. On the 15-minute chart, you trade only after you confirm the daily price action. Only. Yes, you're gonna get it wrong sometimes. I had a losing trade yesterday on the pound yen because I was long, and the price moved backward, took my stop loss, keep moving upward. That's fine, it's a part of the game. But it was a high probability trade. I'll show you. So always confirm the higher time frame, ideally the daily price action, before you execute on the lower time frames. Euro pound. So yesterday I was looking for long on the 15-minute chart, and I got caught in I was looking for this breakout here. For this breakout there, ascending triangle. No, actually I had this one here. Yep, it was this one. It was somewhere here, and I was looking for this breakout, ascending triangle, very promising bullish pattern when it found within an uptrend. So I was buying there with a stop loss below there, and okay, the market took my stop loss. The market moved backwards, then it moved upwards, and it did its thing, and okay, now it's just moving sideways. So a pattern, a trade didn't work, and that's okay. All right, guys, that's part of the trading, and the traders that you are watching, they do live or videos. If they don't show also they are losing trades, and they only show winning trades, just remember to question a little bit. I try to show more the losing trades to explain them, because that's how you're gonna learn. That's how you will understand that it's not only winning trades in trading. We also get it wrong. We also get caught in losing trades, which it's totally fine. But yeah, of course, I also show the winners. That's, yeah. What's within the euro? This resistance now, it's done, and it's going to become a support at the previous swing high. Other traders, maybe they have it like this, totally fine. It depends on the preference of each trader. So this one here, guys, this is now an established uptrend because we have a higher high and we have a higher low. So we need 4 points, as I told you last year. We need 4 points to draw an upward trend line, or to define higher highs and higher lows that makes a trend. So from now on this time frame, now I'm talking on the daily chart. Okay, so the daily chart is looking bullish uptrend. If you go on the 15-minute chart, don't make that mistake to start buying here, buying there, because you identify the daily uptrend. The daily is up. If you want to trade the daily uptrend based on your strategies of trending, uptrending strategies, you can do that so. But if you want to trade the 15-minute chart, the way I teach to trade is to wait for the daily first to confirm a bullish reversal, bullish continuation candle, to add significance to your probabilities for a winning trade. Okay? Euro, Australian dollar, daily chart. As the price remained below the 20-period moving average last week, we expected the market to continue moving lower. Now it start pushing upward. It's a bit, for me, it's a bit messy. So I'm not really interested on that one. Euro Canadian dollar price seems that it found some solid support here at the previous month lows, and now is hitting upwards. Again, it's not a higher high and higher low, so anything can happen. We just need to have some patience and wait for some clarification. Nothing on the Euro Kiwi, Australian dollar, and the Great British Pound. Price makes higher highs and higher lows. That's a good sign of market strength. If you're looking to trade this long today, be mindful that the resistance on the lower time frame has to be this one here. So pretty much this is the room left. But again, make sure you find swings on the lower time frame to trade, and don't try to just blindly buy based on what Theo said on this webinar. Okay, find the swings on the 15-minute chart and try to trade with the direction you believe the market will hit. A defined bullish close on the Euro Canadian dollar can also add some weight to the upside. Euro, Pound, New Zealand, nothing here really. Gold found the support as we marked the support this one. Price yesterday during the CPI found support and bounced upwards. Now the price is moving upwards, at least for the time we read the chart. German 40 bearish engulfing yesterday on the daily chart, so we might see, I believe we're going to see some retrace, some correction here. So on the 15-minute chart, trading with a trend, if the price breaks below here, I will be looking to get involved at least until this level on the intraday basis. So you can keep an eye on that, but we need the price to break below either this low or this low here, and then the room of opportunity will be from here to there. That's a high probability scenario. Why? Because, guys, as we said, we confirm the daily price action. It's a daily reversal here, price action. Then we go to the lower time frame and we try to find ways to trade our plan. My plan on the lower time frames is to trade the swings rather than the price action itself. I trade price action on the higher time frames. And last one, the WTI. As I explained, we expected an inverse head and shoulder pattern here. Price didn't move from this bullish engulfing, and it retraced backwards again, but remains above the S1 support around the $70. There is a resistance the market on the intraday basis needs to penetrate. If that's going to happen today, then we will see the price to likely move upward until the $76 per barrel. Okay, traders, I think that's all for today. I think we cover pretty much all the markets. Myself, MarketMinds Mastery, would like to wish to everyone to have a fantastic trading day ahead. Enjoy your weekend, take some rest, and I will see you all on Monday, again, as usual, at the same time. Bye, everyone.